Hello, it is the 11th of May. The year is 2011. Welcome to the Silver Log. We'll start off with the 15-minute line chart going back roughly almost a year. And the upward trend, we had a test of it when it came up towards the 50 level. Since then, it has bounced pretty hard, and we're pretty much at the lowest levels that we've been, at least based on this trend line. We've had a very significant correction. Whether this will resolve itself into anything more than an intermediate term bear market, we'll have to continue and wait and see right now of just to what the message of the market is. And we'll do that by looking at the shorter term time frame. And on this level, I was talking about this 39 level, which really is this Fibonacci mark. So many different Fibonacci levels suggest 39 to be a significant level of support and or resistance. And it wasn't support on the way down. At least not much more than a quarter or a third of one day. Since we came to this level, it's found a resistance point. It's gotten above this 5-day moving average, which is a declining 5-day moving average, making all of these rallies guilty until proven innocent. In order to prove it innocent, we need to see the 5-day moving average start to flatten out, go higher, break a significant level of resistance, which has now been established, roughly at about 39 and a third to about 39 and a half. If it can manage to bounce at this point, then this is a very good setup because it found a little bit of resistance here and got above it. It's now came back down towards this 5-day moving average. It's also the general area of the 38.2% down move from this low and this high. At the same point, however, if now that we've corrected down from here to here, that it's not able to establish a higher high, say for example, come back up into this area here, start to retrace to the downside, an established support level has been made roughly around the 37 level, odds would be that it takes the level out. Most likely the scenario would be that it comes up towards either this 1-day moving average, up towards this Fibonacci mark, and then of course heads off to the downside. Same point though is by making a move back up to this level, the chances of taking it out or making a break above it also do increase than it did the first time it was there yesterday. Okay, now as far as waiting for 5-day moving average confirmation, the one little downside towards this is that it's the 50-day moving average, which is not shown on this chart, is really 39. So it did find resistance here at the 50. Therefore, I'd want to see a 50 showing signs of a breakout as well as the 5, and if it happens now, then that would be the case. Because if it can hold above this level and go higher, the 50-day moving average is going to be flat around 39. And thus, if you can make some sort of pattern where it manages to maybe break this resistance, come back down to those key moving averages, and then start to go higher, that would give me the breakout signs that I'd be looking for. If it manages to continue to go higher, then now you got this resistance level at around 42 and a half. Moving on now, the price memory for the silver using what the highest, lowest, and closing price is on the daily time frame. I've been mentioning here that it needed some time to correct, mainly within the 39 plus level. Because it's dipped below 39, there's been a few entries added towards this bar in here. I don't know if this means much to you, but for myself, what it means is that I think it's very possible that these levels could top up in this area here. That's the 39 to 43 range, as well as the 43 to the 47 and a quarter range, before it works to make new highs. As far as the comparison, going back to the 1979 rally, I think the only comparison that we can make for now is that of the volatile movements. As I was mentioning, a big move from here to here, sort of like in here towards in there. We'll just have to wait and see on this, but if it manages to make these big moves in here, that I'm going to still keep the comparison at least plausible. I think it needs to stay above really above this 100% mark from the 17 level. That's the 34 mark to stay above. Also, when I take a look at this, I should figure out how much its average percentage it is above, because it was well above the 1979 rally for quite some time, and now it's well above it for the 79 rally. So overall, on an average basis, it's probably done a little bit better than outperform the start of the 79 rally, but right now it's underperforming. Now, as far as the direction from the lowest point that it's seen in the last 50 days, it's only 10% above this level. Now, it has not made a new 50-day low since this chart has been in existence on this particular time frame going back to July. And this is the best that, or the most, the market has retraced from a high within this same time frame. If you're looking for any entry points, what is important is to establish a level of resistance and then look for a breakout point. Say in something like this, if it can establish even like a range like this and then come back down, and as you see the breakout, then you can look for different entry points along the way there. As far as the short positions are concerned, there is just a major move to the upside without much for consolidation to get there. However, if that was the case to get in there, you'd want to see this go lower, and the same sort of deal to go higher to find any type of short positions by using an indicator towards this mannerism. Alright, finally I'm going to just go over the more towards this 50-day low. And this takes me back to 1968. This is the direction from the 50-day low using the LBMA closes. So we're trying to get over the 60-70% mark, and it was well over 200% back in 1980, showing that it's done it before. I don't know if much is within this chart. The direction from the 500, this is the direction from the 500-day low now. So now this is the highest point that we've been at since from the 500-day low, which is pretty much 2 years, since 1980. Thank you for watching this, and have yourself a magnificent day. Bye-bye.